The unstoppable ascent of Blackrock. How a risk management startup became the titan of global finance. Blackrock Inc., founded in 1988, has grown into the world's largest asset management company, overseeing more than $10 trillion in assets as of 2024. Its rise is a story of innovation, strategic foresight, and an unwavering commitment to financial technology. By analyzing its history, strategies, and impact, we can better understand how this financial powerhouse came to dominate the global markets. The early days, a focus on risk management. Blackrock was established by 8 partners led by Larry Fink, who remains the company's CEO. The founding team's vision was rooted in risk management, an area Fink had become deeply familiar with during his tenure at First Boston, where he experienced firsthand the repercussions of poor risk analysis. A $100 million loss on mortgage-backed securities taught Fink a valuable lesson: the importance of understanding and managing risk. The company initially focused on fixed-income investment strategies, providing clients with insights into potential risks and returns. By emphasizing transparency and data-driven decision-making, Blackrock quickly gained credibility. This foundation in risk management became a core tenet of the firm's identity and played a critical role in its later success. The power of Aladdin, a game-changer in asset management. One of Blackrock's most significant innovations was the development of Aladdin, Asset, Liability, Debt, and Derivative Investment Network, a proprietary technology platform launched in the 1990s. Aladdin was designed to provide comprehensive analytics and portfolio management tools, helping clients better understand their investments' risk and performance. Aladdin's capabilities include risk modeling, compliance monitoring, and real-time portfolio analysis. It processes vast amounts of data, offering insights that empower institutional investors to make informed decisions. Over time, Aladdin evolved into a comprehensive risk management and trading system that not only served Blackrock's internal operations, but also became a product sold to other financial institutions. Today, Aladdin is used by hundreds of asset managers, banks, and insurers worldwide, making it a major revenue driver and a critical differentiator for Blackrock. Strategic acquisitions, expanding scale and reach. Blackrock's growth trajectory was significantly bolstered by a series of strategic acquisitions: Merrill Lynch Investment Managers, MLIM, in 2006. This $9.3 billion deal doubled Blackrock's assets under management, AUM, and expanded its global footprint. It also strengthened Blackrock's position in equity and alternative investments. Barclays Global Investors, BGI, in 2009. Acquiring BGI for $13.5 billion was a transformative move that positioned Blackrock as the world's largest asset manager. This deal also brought the iShares ETF business under Blackrock's umbrella, making it a leader in exchange-traded funds, ETFs. These acquisitions not only increased Blackrock's scale, but also diversified its offerings, from traditional mutual funds to cutting-edge ETFs, solidifying its position in various market segments. Dominance in ETFs, the iShares revolution. The acquisition of iShares marked Blackrock's entry into the ETF market, which has become one of the fastest-growing sectors in asset management. ETFs appeal to investors for their transparency, liquidity, and cost-effectiveness, and iShares quickly became a cornerstone of Blackrock's business. By continuously expanding its ETF lineup to include products catering to diverse investment goals, from sustainable investing to sector-specific strategies, Blackrock established itself as a pioneer in the ETF space. Today, iShares accounts for a significant portion of Blackrock's revenue and AUM, a focus on sustainability and ESG. In recent years, Blackrock has positioned itself as a leader in environmental, social, and governance (ESG) investing. In 2020, Larry Fink's annual letter to CEOs highlighted the importance of sustainability, declaring that climate change would become a defining factor in long-term investment decisions. Blackrock introduced a suite of ESG-focused products, including ETFs and index funds, and used its influence to push companies toward greater sustainability. This emphasis on ESG has resonated with institutional and retail investors alike, further enhancing BlackRock's appeal. However, the firm's ESG initiatives have not been without controversy, as some critics question the consistency of its actions and policies. Global reach and client-centric approach. BlackRock's commitment to serving a diverse range of clients, from individual investors to governments, has been another key to its success. With offices in over 30 countries and clients in more than 100, BlackRock's global presence ensures it can meet the needs of investors across geographies and market conditions. Additionally, the firm's dedication to innovation and technology allows it to offer tailored solutions, from customized investment strategies to risk management services. This client-centric approach has helped BlackRock maintain strong relationships and attract new business consistently. Challenges and criticisms. Despite its success, BlackRock has faced criticism and challenges. Market dominance. Critics argue that BlackRock's sheer size gives it outsized influence over global markets and corporate governance. With its significant ownership stakes in thousands of companies worldwide, the firm wields considerable voting power on shareholder proposals. ESG controversies. While championing ESG principles, BlackRock has been accused of inconsistency in its voting practices and investment decisions. For instance, some argue that the firm continues to invest in fossil fuel companies despite its sustainability rhetoric. Regulatory scrutiny. As a systemically important financial institution, BlackRock's activities are closely monitored by regulators, particularly in areas like systemic risk and conflicts of interest. Its role as both an asset manager and a provider of financial technology has drawn attention to potential conflicts. The road ahead. BlackRock's ability to adapt to changing market dynamics and client needs will determine its future success. Key areas of focus include expanding in emerging markets, tapping into growth opportunities in regions like Asia and Latin America, where rising middle classes are driving demand for investment products. Advancing technology, further developing Aladdin and other digital tools to maintain a competitive edge. Innovations in artificial intelligence and data analytics will likely play a central role. Enhancing ESG offerings, strengthening its leadership in sustainable investing while addressing criticisms. As regulatory and public scrutiny of ESG claims intensifies, BlackRock will need to ensure transparency and accountability. Balancing power and responsibility, managing its influence in ways that align with public and regulatory expectations. This includes addressing concerns about market concentration and fostering competition in the asset management industry. BlackRock's influence on global markets. Beyond its financial success, BlackRock's impact on the global economy is profound. The firm's investment decisions influence industries, shape corporate strategies, and even affect government policies. Its role in managing assets for central banks and sovereign wealth funds underscores its importance in the global financial ecosystem. BlackRock's influence extends to retail investors as well. Through its mutual funds, ETFs, and other products, the firm plays a crucial role in helping individuals save for retirement, education, and other life goals. This dual impact on both large institutions and everyday people underscores the breadth of BlackRock's reach. The legacy of BlackRock. The journey of BlackRock from a small startup to a financial titan reflects the transformative power of vision and execution. Its emphasis on risk management, innovation, and client service has redefined the asset management industry. As it continues to navigate an increasingly complex global landscape, BlackRock's story serves as a blueprint for how strategic foresight and adaptability can propel a company to unparalleled heights. Conclusion. BlackRock's rise to prominence is a testament to its visionary leadership, innovative use of technology, and strategic execution. By continually evolving to meet the demands of a rapidly changing financial landscape, BlackRock has secured its place as the world's largest and most influential asset manager. Whether it can sustain this dominance will depend on its ability to navigate emerging challenges and seize new opportunities. Ultimately, BlackRock's story is not just about financial success, but about shaping the future of global finance. As the firm continues to grow and adapt, Its legacy will be defined not only by the trillions it manages, but also by the impact it has on the world.